Nvidia's stock has blasted nearly 930% higher since ChatGPT launched, and somehow investors are still piling in like it's Taco Tuesday in Texas. So here's the question: is Nvidia the next Apple or the next Cisco? A tech titan that keeps compounding or a bubble that bursts when the music stops? Let's find out. Quick reminder, guys, I'm just your average doctor with a mic. I'm not your fiduciary. This is infotainment, not investment advice. Trade responsibly, but at least trade better than your cousin Chad. Seriously? I know you're way better than Chad. You're way better than Chad. I know you are. So getting into it, guys, when we talk about a stock being a bubble, what we really mean is this. It's that really that the price runs so far ahead of the fundamentals that it eventually collapses when reality catches up with it. And so a great classic example of this is the dot-com era. Cisco was the backbone of the internet. Amazing company, real tech, but in 2000 it hit $80 a share, and 2 years later it was 8, and it took investors almost 20 years to break even. So it was a great company, just a terrible price. So today we're stacking Wall Street's hype against my own valuation, and then we'll walk through the bull, base, and bear cases for Nvidia over the next 1, 3, and 5 years. By the end of this video, you'll have the full picture, rocket ship bubble, or somewhere in between. Wall Street right now is absolutely drunk on Nvidia. 12 out of 13 analysts call it a buy. Price targets range from 225 in the short term to as high as 491 in 5 years. Consensus from about 39 analysts puts it around 198 to 200, low 200s, with highs up to 250 and lows near 135. Evercore even bumped their target from 190 to 214, calling it attractive. So the translation of that is Wall Street sees Nvidia as untouchable right now, and that's exactly the kind of hype cycle that inflates bubbles. So here's my take. If you're buying Nvidia at 50 to 60 times forward earnings, you're basically paying pistachio prices for peanuts. And the only way that makes sense is if you think those peanuts are going to solve inflation, solve world hunger, and if they don't, you're left with peanuts. Now, my model assumes around 30% earnings growth, which is basically what Wall Street's already baking in. If that slows to 20 to 25%, I put pair value around or under 180. If Nvidia keeps that 30% plus growth, 200 looks fair. Most fair value estimates I've seen online and I've looked at cluster between 150 and 220, depending on whether Nvidia can actually sustain those 45 to 55% margins, which, by the way, are insanely high and really stick around forever. So yeah, a great company, no doubt, but price for perfection, that's for sure. And perfection in markets is usually where bubble risk sneaks in. In the bull case, Nvidia isn't surfing the AI wave; it is the wave. They own 80% of the GPU market and power 75% of the world's top supercomputers. CUDA is basically a toll road every AI company has to pay up to drive. Wall Street's view, about a year, they think it's going to be around 225 to 250. 3 years, about 300 plus. 5 years, about 491 plus. My view, I see in about a year, 210 to 225. That's about 6 months to a year out. I see it around that price. 3 years out, I see it about 260 to 300, and 5 years, 350 to 400. But that's only if AI adoption compounds like the internet did in the 90s and if the returns are solid and they're real. In this world, bubble fears look dumb. In the bull world, Nvidia keeps dominating and the stock justifies it. Now for the base case. Still a strong company, but expectations cool down from moonshot to mega cap reality. Wall Street's consensus in the base case is in about a year, 198 to $200 per share. In about 3 years, 230 to 250. 5 years, 241 to 280. My valuation, I say in about a year, 185 to 200. 3 years, 210 to 240. 5 years, 250 to 280. And so in this case, Nvidia still wins, they still grow, but margins normalize. AMD and custom chips from Amazon, Google, whoever else, they start nibbling at that market share. And hyperscaler spending doesn't go vertical forever. The bubble doesn't pop, it just quietly deflates. And then we've got the nightmare. The actual bubble burst. Wall Street skeptics say in about a year, they could see 135. 3 years, 100 to 120. 5 years as low as $38 to $60. My take, I see a year out. In the bear case, we see 150 to 165 if margins crack, demand cools. 3 years, about 120 to 150. 5 years out, maybe 80 to 120. If we get that AI winter, massive spending now, but no return on investment yet, like fiber optics in 2000, this would be closest to what the tech bubble looked like in this case. This wouldn't be because Nvidia is a bad company. Cisco, for example, in 2000 was amazing too, but even the best companies can become terrible investments when prices outrun reality. And so you always have to be looking out for that. So, what could actually pop this bubble or keep it inflated? Let's talk about the risks. So, the potential needles or the pens which could pop the bubble. Let's get into it. It's margins. So, that's one of the first things. NVIDIA is printing 45 to 55% net margins. If competition slices those, the valuations can unravel pretty quick. Geopolitics is always something to consider. 13% of revenue is tied to China. China. Export bans already hitting. That pipeline can shrink overnight. The AI winter, per se. Spending booms now, but if adoption return on investment lags, a lot of CFOs in these big tech companies, they can slam the brakes. Market concentration. Nvidia is part of the Magnificent Seven, which, if you didn't know, the Magnificent Seven is around 40% of the S&P 500. If one giant wobbles, the whole market shudders. Something always to take into account. Now, getting into the catalysts or the pumpers, the pumps, AI adoption actually monetizes. Enterprises turn hype into cash flow, fueling GPU demand. Product cycles, the Blackwell chips and successors keep NVIDIA a generation ahead of the other competitors. The CUDA moat, software lock in, forces every AI company to keep paying NVIDIA's toll. Narrative momentum, every AI is changing the world, man. Headline adds helium to the balloon. Bottom line, it's a tug of war, pens versus the pumps. So is Nvidia a bubble? By fundamentals? Maybe. Actually, maybe. Yet to be seen. So the stock already prices in perfection. If margins slip or growth slows, bubble risk gets very real. But if AI keeps delivering, the rocket has more fuel. Either way, don't confuse momentum for margin of safety. Nvidia's dominance is real, but price and fundamentals don't always stay friends forever. They can break up. It happens sometimes, especially when your best friend is an AI. All right, everyone, now it's your turn. I want to hear from you. Are you team bubble or team rocket ship? Drop what you think in the comments. Let me know what you think. Love to hear from you. If you're team bubble, I want you to smash the like. If you're team rocket ship, I want you to smash it 3 times. I appreciate you guys. Thanks for your time. Thanks for tuning in. I'll see you guys in the next one.